The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your confidence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started. G'day traders, mindset reset and a technical video. We're going to be talking about the Friday, the inside day signal, page 69 in the playbook. And in this particular case, we're talking about a 3-day setup. A 3-day setup as Monday is the first day in a new week. And just for clarification, as I received this question again today from a few traders, if Monday is day 3, well, that would mean that Friday, therefore, is day 2, and therefore Thursday is day 1. Now, if Thursday is day 1, we're looking for instruments where either the peak formation low of week or peak formation high of week is made on Thursday, starting our day count. And if Thursdays are high of week or low of week peak formation, and we have a signal day on Friday being an inside day, typically we'll be looking for one of two types of opportunities depending on how our weekly chart has closed. We may have markets closing in breakout. We may have markets closing at the low of the month or at the high of the month. There are two types of opportunities that can present with an inside day. False break reversals aligning us with a 3-day template, or trend trades where we see markets that will break out, consolidate, and continue to trend out of an inside day and also consolidate and reverse out of an inside day. Now, these setups boil back to which ones you're hunting, not guessing, because these templates will show up specifically, rinse and repeat, based on trapping traders often on the wrong side to continue an explosive reversal or continuation opportunity, or if we have markets that are reversing up high or down low near the ends of months or after 3 levels, 3 weeks of rise, 3 weeks of drop, we can see markets reversing out of narrow range and coiled inside day opportunities. Typically on an inside day, we'll see markets trigger breakouts on one side where stops will be on the opposite side of this range. And if we have a market up high, we'll see these markets explode and reverse and sometimes continue with a longer time frame existing trend. Sometimes these markets will be down low near the end of a month. We will trigger breakouts, and these markets will trap shorts down low for an explosive reversal day 1, day 2 into the new week. Most important thing to understand on a Friday, the inside day going into a Monday, is a signal day. And if Thursday forms one of our extremes, we now potentially can be looking at a 3-day setup. Now on Friday, the Japanese yen had an inside day. If we scroll through our major pairs, we'll look at the Swiss franc. It also had an inside day. Canadian dollar, no signal day as per an inside day. The British pound, same. We have a market that closed in breakout, but not an inside day. The euro gave us an inside day on Friday. The Aussie dollar did not give us an inside day, but we had 3 days of breakout traders triggered into the market that broke down through the low of day, giving traders the low-hanging fruit, the lower low on the inside, and the low-hanging fruit continuation parabolic collapse back through the low of the week. The low-hanging fruit trend continuation trade, page 96 in the playbook. Friday did not give us an inside day on the New Zealand dollar, but while we're here, we will talk about that. We have a market that formed the peak formation low on Wednesday. Inside bar traders were triggered on Friday just prior to the close. They triggered the breakout before pulling back and closing in range, breaking down underneath of the closing price level, coiling sideways, a lower low, and a parabolic collapse on the U.S. session on Monday. Now, while we're here, we'll talk about this and differentiate that from the opportunity on Monday for Fridays that are inside days. Now, one of the questions that I received was that, well, how do you know when an inside bar
is going to be a false break or a trend trade. Well, that comes back to building your muscle memory, but also understanding where we're at in the template, what day it presents, day 1, day 2, day 3, reset, day 1, day 2, day 3. We have other time frame sellers in a market that has broken outside of the previous low of week level. Triggered breakouts, pulled back inside, had an inside day 1, day 2, day 3 into the closing range of the week. So we have other time frame sellers potentially above Tuesday's closing price and Wednesday's high of day level. We've triggered breakout traders. How does price behave on the day? It breaks down into the London session, breaking the low of day level before pumping back up and collapsing with the low-hanging fruit trend continuation trade. So recognizing that once they trigger the inside day traders into the market from the high of day level, there may potentially be stops on the opposite side of that range. They didn't take that level out until the US window. They've gone down, and you heard me use the phrase, when a market coils sideways above the low of week, low of day level, or beneath the high of day, high of week level, it's preparing potentially for an explosive parabolic move. Understanding we've already made lower lows, that's the setup for the pump and dump and the collapse third hour into the low of week level. But the inside bar traders are now triggered in Friday, Monday. So again, we break Friday. They trigger them again one more time at the beginning of a new week, higher highs, triggering breakouts before breaking down and collapsing with the low-hanging fruit trend continuation trade in a market that broke the previous week's low of week level. Now the Swiss franc has a peak formation up top, but it's in line with our high of week level of the inside day made on Friday. When we look at our Japanese yen, if we back this chart up from the beginning of the month, we have a market that has broken out on non-farm payrolls, closed in breakout, continued to make higher closes at the end of the week. So we have week 1, week 2 making higher closes, higher highs, range expansion on the upside. So we're breaking previous weekly levels. We're expanding the range on the top side. Monday, Tuesday breaks the low of day level before closing back in range above Friday's closing price. When we make a higher high and extend the weekly range, that's a range expansion. When we're inside of a previous week's range. You may recognize day 1, day 2, day 3, a day 0 template, peak formation high, peak formation low. Page 84 in the playbook, the 3-day template. Thursday closes in breakout before breaking down and reversing and closing back as an inside day on Friday. A close in breakout, a higher high, and then the inside day. Now, coming back to what I have talked about in previous videos, this is a signal day. This is what alerts us to a potential opportunity that can show up on Monday, day 1 in a new week in the session that we're trading. Now, potentially this market can leave the station, which it did for U.S. session traders. The market has already gone parabolic in the London window. I'm going to answer a couple of questions that came up today. So first of all, this is a signal. This is what comes onto our watch list on Monday as a potential candidate. Now, this is an inside day. If this market had broken a level, Thursday would be day 1. And one of the questions I got is, how can Friday be day 2? Now, when this market breaks down in Asia and takes out Friday's low of day level, we now have a day 1, day 2, day 3 template. As soon as this low of day level is broken, this confirms Thursday as day 1 in a 3-day trading setup. Now, I'll repeat this. This is a setup that we're hunting on a Monday when we can find a Friday that's an inside day and Thursday forms one of the weekly extremes. If it's Monday and Monday we're looking for a 3-day setup, by default then Friday's day 2 and Thursday is day 1. We have a market that's been making higher closes at the end of the week, and it's been going up since the beginning of a month. Week 1, week 2, week 3, we're starting week 3, we have higher highs, and higher highs are a potential template for the dump and pump. So we'd be ideally hunting if it presents a false break reversal, triggering other time frame traders on the inside day signal. The market breaks out, triggering shorts from the inside day, other time frame traders into the market, coils sideways on top of the previous Friday's closing price level before reversing at 2 a.m. at the low of day level at the Europe Open, 2 a.m. New York time, for the parabolic reversal back inside of the inside day signal. 9:30 New York Open, we have the sideways coil into our universal EMA for the continuation trade. And if we take our 100% range expansion from low of day to the high of session made just prior to our US window, we can project a 100% range expansion as a potential profit target. This forms a larger consolidation. We've broken out, that's reversed. That low of day level to our high of session becomes a new consolidation box to project a potential profit target. Higher highs made on Thursday, close and breakout, triggering other time frame traders the inside day, triggering shorts on Monday, but also understanding that we had breakout traders in the market on Thursday. The market has come back to hit those low of day levels. So if you were long on Thursday's close on longer time frames, hourly, 4 hour, daily close and breakout, those markets reversed and broke those levels today, hitting stops and then triggering reversal traders after inside bar traders have been triggered. This is a Thursday, Friday, Monday trade setup, day 1, day 2, day 3. This is a rinse and repeat setup that shows up frequently over a basket of instruments. We're just demonstrating this on the currencies. And you can obviously look at cross rate pairs when one of the majors shows this signal, because it may show up on one of the cross rates. You can pick and choose which one sets up best on the day, or you may have a lagger that shows up in your session. So for example, we had the move occur in Europe. We have the low-hanging fruit continuation in the U.S. session, and understanding that we have other time frame traders now triggered into the market on the false break reversal of the inside day signal. A parabolic playbook best trade setup. Keep it simple, rinse and repeat, traders. This signal will show up frequently over the year on Fridays, Free Cash Friday. An instrument that's a narrow range day can potentially alert us to an ACB trade setup opportunity. Keep it simple, rinse and repeat, scale it up in size, and in between, sit on your hands and wait. And may the markets go with you.